We've had a slew of results being released today, and amongst the lot, those of Goldfields. Goldfields earnings falling in the fourth quarter as strikes bite. That's the headline. Of course, 20% fall in headline earnings coming through over the period, and largely because of the impact of an illegal strike at two of its South African mines. It has since spun off. Joining us now in studio to unpack the numbers and sentiment around the sector right now is CEO of the company, Nick Holland. Nick, thanks so much for joining us this morning. Let's get straight into it. I mean, I was listening to a market commentator the other night, and he says, I don't like gold shares. It's difficult, it's too much hard work. How are you feeling about captaining a company within the sector right now?
I think the sector has been very difficult in the sense that we've seen a rising gold price for a decade, and the gold equities over the last 5 years have been stuck in the mud and have done nothing. So I can really understand how investors are frustrated. I'm also frustrated. And this is one of the reasons that we've re-looked at the entire company and have spent 6 months looking at every asset, every project, the structure of the company, and the creation of Sibanye is in some part addressing those concerns. And I believe spinning off those assets and liberating the management team to have that cash flow to either pay out to shareholders and create a high yield company, which we haven't seen in the gold space in South Africa for 30 years, I think will be an attractive proposition for investors. I think that can change the momentum. I think also we can create consolidation in the South African gold space by having a significant player now with currency to do so. So I do expect that Sibanye will be active over time, but they shouldn't lose sight, of course, of the key operational challenges that they face.
Nick, it's a bit of a contradiction, isn't it? On the one hand, and Neil Froneman said, the reason we're attractive is high dividend yield. We're not looking at a long-term investment where the share price appreciates over 30 years. So that sounds attractive, and certainly, I want your view on what you think of the listing and how it went in terms of expectations. But then on the other side, those South African issues which investors are aware of or perceive, strikes, production issues, costs, are still there.
Are still there. I think the listing pretty much was in line with my expectations. If you look at the two share prices at the moment, they're tracking really what we were before. And I didn't expect that we were going to reshuffle our assets around and voila, you create a whole lot of value. It doesn't work that way. And if there is going to be a re-rating, it's going to be contingent on Sibanye delivering on what they've indicated they want to do. And for Goldfields, that's created a more defensive portfolio for us to make sure that South Deep delivers, and we can keep the wonderful international assets that we have producing in line with what they did this last quarter. Now, if we look at the industry, the effects of what we've just gone through over the last 6 months have deeply impacted everyone. The workers went off on an unprotected strike. They came back to work and didn't really get anything for it. They lost their bonus, they lost their pay. We lost a lot of revenue. So there's no winners, including the country. So we all got to sit down and figure out, where do we go forward? We need all of the players to work together. We need the government to back off on taxes. We need the government to back off on electricity increases. We need the union to be sensible about increases relative to productivity. And we as an industry have got to be sensitive about the need to transform and to commit to our social programs that we put in place.
Of course, Nick, these were the kind of conversations that were happening at the mining in Durban this year, and sitting here in Johannesburg and listening to some of the views that we were getting from that end, one got a sense that there was an improved tone, and better conversation happening and better dialogue happening between these respective parties that you've highlighted. I mean, is that the way things are at this stage? Are we looking at an improved environment for communication?
And maybe it's just worth adding David Gleason's comment in Business Day at the time. He said fine words on both sides. The chief executive, Cynthia Carroll, Mark Kutifani, people like that.
Sure.
But afterwards, do they go back to their old tricks?
Exactly.
Yeah, if we do, then I think we are going to see another decline in the industry and more job losses. So we are all in this together. And it's going to be very important the government, the unions and ourselves work together. We need each other. And I think there's the best possible time now for us to move forward. I'm optimistic that we can see progress, and I think there's now a better understanding after the events of the last 6 months. So I'm pretty sure that we're going to get something different, including changed working arrangements, improving productivity, And I think that's going to be the best recipe for us to save this industry.
But Nick, that does come back again to the power of the unions and the culture of blocking, for example, continuous work. And the point has been made, most jurisdictions in the world, that's the norm. Here it isn't for historical reasons. Productivity. There's that graph showing wages and productivity in the South African economy generally. What are you going to do to turn this around? Because it's clear it needs to be done, but it's easier said than done.
Look at what we've just achieved at South Deep. We achieved what many people said we couldn't achieve. We moved South Deep to an international working arrangement model. 24 hours a day, 7 days a week. And that was an agreement that we negotiated and finally agreed with the unions. I think that sets the benchmark for what the rest of the industry need to do. So it shows it can be done. Now that's a very different operation, but if we can improve our working arrangements there and it benefits everyone, why can't we follow the same model on the other operations in gold and platinum?
Is there any reason why you can't?
No. We've got to get out there, get everyone in a room, and we've got to start talking about it now. There's no time to lose.
Of course, it's about getting those production levels up as well. I mean, you've got the loss coming through now as a result of the 110,000 ounces of production that you lost during the strike period. Just how are we doing on the production line front? What's your forecast in terms of those production targets moving forward?
Well, Goldfields, of course, is a very different company now because, as you indicated earlier, we don't have those assets. So I'm going to let Neil Froneman talk about Sibanye's production, not me. For the rest of the portfolio, I think it's pretty positive. The international operations are reasonably stable. We've cut out some high-cost production because we're focused on improving our margin and cash flow in line with wooing investors back. And South Deep, with the new operating model concluded in October, sets a really good foundation for improvement in 2013. So I'm very optimistic about the prospects for new Goldfields. And I think it's going to be very interesting how the company is looked at by the international investors in particular, because the bulk of the operations are in fact international. Our international production is going to make up around 85% to start with, and as South Deep ramps up, it'll still be around about 72% of full production. So we have a truly international company now.
It was interesting to watch that on the listing of the shares. Sibanye listed it, I think, at around 13 Rand, went up, and the next day went up again, as if the market had digested it and now said, actually, we like the look of this, looking at the noise around. Goldfield share price went down 13%. So what should the investor out there who's not a professional fund manager, how must he think about having got one Goldfield share, one Sibanye share? How's it working for him?
I think it gives him investment options, which is something we haven't had before. There's a lot of investors who are very bullish on the gold price that like to buy highly leveraged plays. And that's exactly what Sibanye is, including a nice high dividend yield. So that's an interesting investment opportunity. Others will say, well, I like the Goldfield share price because of the international exposure. You know, maybe I'm going to sell Sibanye and I'm going to buy some more Goldfields. So there's going to be a lot of churn in the registers of the two companies. And I think you're going to see 3 or 4 months of high volatility, high share dealing activity before the two stocks come to rest. And I think as the strategy for Sibanye becomes more clear, as we see what the new Goldfields is doing, then I think we'll get a better indication as to the re-rating potential. And that's probably 3 to 6 months off.
Presumably you'll still be talking a lot to Neil Froneman. I mean, it's not as if these are two distant separate companies. There's still a lot in common.
Well, there is, and also transitional arrangements between the two companies on various services. We'll put an agreement together for at least 6 months, probably a year. And at the end of the day, we're all in this together. So it's very important that ourselves and the rest of the industry work together to improve the image, because we either all go up together or we all go down together.